are live.
Okay, good afternoon. Thank you so much for joining us today. It's a privilege to welcome you to the Indirect Tax Talk, a webinar series that we've specially curated to bring to fore insights on potential and existing litigative issues. Now, this was conceptualized to discuss the latest interpretative issues in indirect tax and have a nuanced perspective from a panel of experts. If since the introduction of GST in 2017, the journey has indeed been transformative as we've traversed a path which has seen frequent legislative developments, an evolving tax technology ecosystem, compliance hurdles, challenges to tax positions, and legacy tax issues. Now, this has led to alternate views and disputes on a range of issues. Recognizing these challenges and developing a cohesive and informed plan is therefore key to navigating a clear path amidst the evolving dynamics. In a panel discussion today, we will be covering GST challenges around employee transaction, as this has seen a significant or a fair amount of disputes. Our focus will be on four key issues. Number one being the treatment of perquisites from employer to employee. Number two being the debate on liquidated damages versus tolerating an act when it comes to employee issues. Number three would be the impact of the recent Supreme Court decision in respect of secondments. And the last one being on the bucket being RCM on residential dwelling, which is possibly a potential minefield of another round of discussion. Joining us for this very interesting discussion is a panel of experts. I welcome Mr. Pankaj Gupta, who's the Country Tax Manager, IKEA in India, Karthik Solanki, Partner Indirect Tax BD on India, and Sandeep Chilana, Managing Partner, Chilana and Chilana Law Offices. A very warm welcome to all of you, and I look forward to a very engaging discussion. Let me straight away go to the first topic at hand. Now, if we think about perquisites, there was a debate on whether GST is applicable if an employer is giving something to an employee as a function of employment contract or otherwise. Now, because there are cases in business where medical insurance, let's say, or transportation, canteen facility, etc., is made available to employees. Now, one may recover that amount or provide it on a free of cost basis, depending how the terms are. Okay. So one of the key aspects on this is what would be the taxable base? Is there, firstly, is there even a levy on it? If there is, then what is the taxable base? What happens to my procurements? Do I get credit of that or not? So one of the key aspects which has been addressed in a recent circular on perquisites is that if it is provided by the employer to an employee as part of a contractual arrangement, then it is not leviable to GST. So now let me come to you, Pankaj. Given this circular has come about, could you just share some light on what is the difficulties that the industry had to face in the past before this came to fore? And do you think there's any issue which is still ongoing in respect of this aspect of transaction?
Yes. Thank you, Smita. If I talk about this particular issue, the GST on the recovery from the employee, this has been a debatable issue since service tax, but then there was certain relief in service tax. But in again the GST, the law was replicated from there, and this issue continued. So a lot of companies were there in dilemma whether the GST is applicable on the recovery from the employee. The dilemma was due to the reason that the recovery is without any consideration, like underlying there is no service there. And that is what the industry has been representing to government, that GST should be applicable on these services which are provided underlying a contract and payment, and not only simply on the basis of payment. And this is a very welcome recent circular of the government, where they have clarified that recovery from employees and particularly the notice pay, which is a big debate issue, GST is not applicable on the simple understanding that there is only a payment for non-fulfillment of the contractual obligation, but there is no underlying services which are being provided. So I will say this is a very welcome circular by the government, which government has issued to ease out the business, to resolve the position which different corporates are taking. So I will say that is a welcome decision, and I see that most of the issues the industry on this part has been addressed. Back to you, Smita. Thank you.
Thanks, Pankaj. So the circular which has come about with respect to employees on notice pays are definitely a welcome move which the industry was looking forward to. The one on perquisites also brings to fore the fact that if it is a function of employment and therefore as a in pursuance to a service of existing employment contract which an employee provides to an employer, then of course there is no GST on it. But Karthik, can I have your thoughts then that I know that so as part of the schedule, employee rendering services to an employer is not taxable, understood. Circular clarifies that it has to be an extension of your employment contract. Now, do you think that there is something which is still outside the tax net? Could you just share some quick thoughts around that, please?
I think the circular clarifies, as Pankaj said very clearly, the circular clarifies the most important principle that if I am providing any perquisite to an employee as a part and parcel of my employment contract. And when I'm saying employment contract, by extension, it may not only be your employment contract per se, it can also be your HR policy, which is a facility is given to all the employees at large, or in some cases, depending on their hierarchy in the organization. All the transactions are outside tax net. If you see, this is the first this is not the first clarification on the issue. The first time this whole concept came about in terms of if I am an employer providing a perquisite to an employee in terms of employment contract, there is no taxability. That started first time in service tax in an advance ruling given by in JP Morgan's case, wherein it was mentioned that if I'm providing this cars to the employee as a part of his employment contract, there is no service tax. When GST came in, as Pankaj rightly said, there were a lot of apprehensions on this issue. And everybody was somewhat unclear that because employer to employee is a related party transaction, there is no need for a consideration, will I be taxed? And we got a press release at that time on July 2017 itself, clarifying on the same position. And now the circular has also, again, on the same line, it's reiterated. So essentially, the position has remained fairly clear and on the similar lines. So to my mind, till the time it is something is very clearly mentioned that I am giving to you just by being virtue of my employee, and I am giving this to you for all the employees, and that is documented. I think there should not be any tax liability.
Yeah, thanks for sharing that. Sandeep, if I can come to you on this, now that the circular has come about, and as Karthik also elucidated that if it is, emanating from my employment contract, it should be fine. But do you foresee, so my twofold question to you. One, do you foresee any further litigation on employee perquisites? And secondly, what would you recommend as an action step for existing disputes on perquisites which are still pending resolution?
And thank you, Smita. The first aspect that I would like to highlight, obviously, a circular that clarifies a position is always good. Ideally, I would have wanted that there should have been a statutory amendment to this effect, because at the end of the day, insofar as Schedule 3 is concerned, it talks about services provided by employees to employer. And so long as barter remains in the definition of supply in Section 7, there always remains a risk of how this can be interpreted, being employer and employee being related party. So obviously the best case would have been the government should have brought a statutory clarification so that this should have not remain an issue anymore. Obviously, it does not lie in the mouth of the revenue to go back from the circular that it has already issued. There are empty number of Supreme Court judgment which says that all beneficial circulars are binding on the authorities. But the problem comes, and why do we have these judgments? We have these judgments because despite there being circulars, the authorities were not following them. So in this circular, if you see particularly, there are two aspects. One is contractual arrangement, which is talked about, and second is in lieu of employment that is talked about.
Right.
It is essential that for any transaction to take the benefit of this circular, these two conditions must be fulfilled. And if the tax authorities are able to argue that either any perquisite is granted beyond the contractual arrangement between the parties, which is in the nature of employer-employee contract, or it is not in lieu of employment. In both these scenarios, it is still possible that the tax authorities may not want to follow this circular. And in that case, obviously, we'll have to argue that circulars are binding on the department, irrespective of whatever may be the position that the inconsistent statutory provision may suggest something else. But at the end of the day, that is what we'll have to argue. But I still believe that there is a possibility in certain scenarios. Say, for example, if something is provided to the employee, I'll give you an example that there is an employee who's a legal, say, employee in the company, but he comes up with a deal, and that deal, because of that deal, he is given something. He is given free tickets or flights or gifts or monies. Now, that is not a part of his employment. It was not contractually agreed that he would get a deal margin if he gets a deal. So all those kind of issues may still come up despite this circular, unless the government comes up with a statutory clarification.
Right, and what I also understand now that unlike the previous times, the way the judgments are panning out as well as the rulings are coming to fore, one would have to be very careful to see what exactly should go in an employment contract. If there is an intention to make something available as a function of your policy or the terms of arrangement as such that it should be factored, then that should be something that one should quickly address so as to avoid another channel of litigation which is just unwarranted at this stage. So thanks for sharing your thoughts on this, Sandeep. Now, while we briefly touched upon this in the previous conversation itself, but we were discussing about perquisites when an employer is giving something to an employee. I would extend this to a scenario where, let's say, I'm recovering something from an employee. And that's what Pankaj was also highlighting, because there was extensive litigation around this under both service tax and GST laws. And the circular indeed is a welcome move. And Pankaj, I'll get back to you on this. Do you I believe that, this has put to rest a lot of concerns that the industry had on this. Any thoughts on this?
So, on this recovery from employees, as I have already mentioned, that this is something which we were expecting as a relief, and we see it as a relief. So, as Sandeep has rightly mentioned, certain challenges. But still, as an industry, we see it as a relief, and we see that a lot of challenges of the past have been addressed in this.
Yeah, thank you. That's indeed something that has been echoing across the discussions when it comes to industry. And I remember when the circular came about and there was a big sigh of relief. Karthik, coming to you. Now that I will already address that, but do you think the position under GST is an echo of the service tax treatment on the same issue? Because we've had tribunal rulings on this before, especially on notice pay recovery under service tax. That wasn't finding any reference in GST. Any thoughts around that, please?
No, I mean, as far as, again, service tax is concerned, there was no guidance specifically given for whether notice pay is taxable or not. And that's why the tax authorities were always looking to tax any amount recovered as notice pay. Obviously, because the same issue was expected to continue in GST because the same language is used. In GST, in service tax, definitely, as you rightly mentioned, there were a lot of tribunal decisions now, which say that there is no service which has been provided by the employer to the employee in case of notice pay and a High Court judgment. The same position continued even in GST. So again, the position should continue. To again bring back one specific point, the circular. The circular, if you see the language, refers largely to bond periods. That is, if an employee at the time of joining undertakes that, okay, I'm going to be here with you for minimum, let's say 2 years, right?
Right.
If I'm going to be here and if he kind of lives in, let's say, in 1.5 years or a year, whether the amount of recovery which employer makes, whether that is taxable or not. The circular largely uses those words, bond, etc. It does not use the word notice pay in black and white. However, if you look at all the ratio of other previous clarifications, etc., I think clarification in the circular itself and the reasoning given for non-taxability of bond amount in both cases, it is evident that even notice pay will go on the same footing and it should not apply. The taxability should not be there.
Right, and I believe there's a, if I recollect it correctly, there's a mention of any amount recovered in lieu. I think that reasoning could extend to notice pay recovery, even if it doesn't find a specific mention.
Yes.
So, Karthik, what do you think would happen? So, let's say I'd already paid tax on notice pay recovery, right? Now the circular clarifies that it is not something on which I should have paid tax. What happens in that scenario? What are the recovery measures that I have? How do I recoup that?
So obviously, if you have not recovered this tax from employees, the amount which either the corporates would have considered as whatever notice pay amount was deducted was treated as inclusive of tax and paid, or in some conservative position, they would have paid the tax on their own by including on the overall amount.
Right.
Now, having looked at the clarification where they say that there is no taxability of this transaction, the amounts which have been paid to government technically do not take the character of tax. They become an amount which has been paid to the government, and that should be refundable because that amount has been paid to government without any levy. Because it becomes refundable, now there are two questions. One, by what time I can claim a refund? And two, am I hit by the principle of unjust enrichment? That is, am I getting a double benefit of recovering from somewhere else, passing on the cost, and also recovering this from government?
Right.
Let me take the first part, time limit. I think time limit, because this is not a tax amount, the time limit which has been prescribed in the tax statute should not apply, because those time limits clearly apply if you are asking for refund of a tax amount. Given that this is not a tax amount, you can still ask for a refund of this whatever taxes have been paid on the notice pay. Having said that, there is also a recent extension which has been given in GST law also, that for 2 years of COVID period, this period will not be considered as a limitation for claiming refunds. So effectively, as far as GST is concerned, in any case, the time limit of last 4 years is open. 2 years of extension plus 2 years of my normal time to claim refund. Going by the clarification, we can still go back and claim a refund for tax paid on GST, under at least under GST. Coming to unjust enrichment, I think again the Supreme Court has been very clear on this. Any amount which you are recovering from government, you need to meet the test of unjust enrichment. Now, in this case, given that the corporates typically never recovered this money from the employees and bond this amount from their own pocket, I think there is no question of unjust enrichment and the refunds should be sanctioned easily. The documentation has to be clear in terms of employment policy that what I have recovered is just the money, and there are no any mention of any taxes as applicable or anything. Because if those kind of words were to be there in any of the employment letter, it kind of alludes that whatever money has been recovered, that also had an element of tax on that.
Right. So I think one would just need to quickly first assess that whether it is hit by a bar of unjust enrichment at all or not before going on to the next step. Sandeep, because this is a concern, unjust enrichment and limitation, both is a concern common to your issue on perquisites as well as the notice pay recovery. How do you see the litigation panning out on these issues?
So, okay, as Karthik said, this amount which is paid under a mistake of law does not necessarily partakes the character of tax, but this issue per se has been analyzed by Supreme Court in multiple locations. In fact, larger bench, there's a 9 judges bench decision in Mafatlal, which have also categorized different categories of amounts and whether the limitation would apply or not. So undoubtedly, where a tax amount is deposited under a mistaken belief of the same being taxed and that levy is held to be unconstitutional on a later date, no limitation applies. There is no doubt about it. Further, tax paid without prejudice, where you say someone has come in, I have paid it under DRC3, I have written without prejudice in that, no limitation applies, no dispute about it. But there still exists a dispute, and there is, not that legal picture is not that clear with respect to the category where I voluntarily continue to pay tax under a bona fide belief that tax is payable,
Right.
which later on is now found is not payable. In those categories, the issue of limitation would still arise, and as Karthik rightly said, that it may not be of much relevance or much impact, because still we have 4 years period for which the refund can be claimed because of the extension that has come in. So to that extent, that is not a major issue. But if it goes to court, at least my view is that in these scenarios where based on a circular, anyone who was bona fide paying taxes voluntarily without any litigation may not be able to walk out of the limitation provided under 54. Though there would be an option to file a civil suit in view of the 9 judges bench judgment in Mafatlal, and there the limitation would be 3 years. But that's a different story altogether. That's a 1996 judgment. I don't know, how the courts will interpret it if that was to be tested today. So that's a limitation. Insofar as the unjust enrichment is concerned, there is a presumption against the SSC under section 49(9), which says that if you have charged tax, it is presumed that you have collected it. The incidence of tax has been passed on to the customer. Now you have to disprove this presumption against the SSC, which is provided under the Act. Now, obviously, disproving this would require a lot of documentation. As Karthik said, you have to support with agreement saying no tax was being recovered. Even if I have paid tax, I have paid it using cum duty option. And you will have to justify that nothing was actually recovered from the employee. So that is insofar as directly recovering from the employee. I believe most of the companies were not recovering the taxes from the employee, should not be an issue. But there is another peripheral issue which the tax authorities raise, that if you have expensed out the tax in the P&L, that also amounts to unjust enrichment, because that it should be deemed that you have passed on the incidence of tax to the customer. So on that, obviously, that is a common dispute that is raised by the authorities, but there are various judgments now. The most famous was being Madras High Court judgment, Flowtech judgment. There are other High Court judgments, C-Stat judgments, where they have said that merely because I have expensed out a tax in my P&L, that does not mean that it would amount to unjust enrichment. And to that extent, I completely agree with Karthik on that on limitation as well as unjust enrichment, it should not be a big challenge. It is a good opportunity to explore to get this money back.
Let me just quickly ask you one more short question on this circular itself, and then we will move to the next topic. If I look at the circular, so while it says there is no tax incidence when it comes to notice pay recovery, it also says that we need to have a separate arrangement and a corresponding consideration for something to be regarded as a tolerating an act which leads to a taxable activity and thereon a GST incidence. Could you quickly share maybe a few key distinguishing parameters, because that's not something which is clearly spelled out in the circular, and I believe may lead to further incremental litigation. Your views on that, please.
Sure. So see, insofar as the examples that are given in the circular, as Pankaj also said, insofar as industry is concerned and the officer is concerned, they are comfortable. Nobody is going to challenge them. Right. But what are the underlying principles to analyze transactions that are not specifically covered under the agreement? So the bottom line, the legal principle that is enunciated in the circular is that there should be an underlying contract between the parties. There should be a breach of that contract. In view of that breach of contract, under contracts law, under section 72, 74 of the contract law, you should have a right for damages or penalty. Right. If such damages and penalties are recovered, whether they are called as liquidated damages or notice period pay or bond charges, whatever they are called, so long as they represent the damages payable on account of breach of a contract, GST should not arise. But anything other than that, which is on account of a contractual arrangement between the parties, which may be for doing something, not doing something, abstaining from doing something, all that would still be exposed to GST, and each contract will have to be analyzed whether the amount that is recovered is actually a damage for a breach. And there is no contract which says that I will tolerate the breach. Every contract presupposes that it will be fulfilled. And only those expenses, only those damages which are recovered for not fulfilling the contract are outside GST as clarified by this circular.
Thanks for sharing that. So effectively, as a takeaway of this is merely because the circular is out there, it doesn't mean that I can presuppose that it's a treatment of liquidated damages which will necessarily come to me. One would have to carefully evaluate and see whether it comes in the bucket of liquidated damages or otherwise to protect against any potential dispute on this issue. Thanks for sharing that. Let me now get to the next key development, which is in the form of the Supreme Court decision in the case of Northern Operating Systems. This judgment upended the position that people were adopting hitherto, because now it's at the service tax demand in respect of reimbursements made to in respect of employees to an overseas entity would actually be under the service tax net. Now, these employees, in the facts of the matter, were under a contractual arrangement with the Indian entity and were bought for a specialized work. The Apex Code delved into the key parameters of what would constitute an employer-employee relationship. And there were specific tests, for example, no right of termination with the Indian entity and so on and so forth. But because the judgment has been brought about and now there is a reverse charge incident in the case of cross-border secondment arrangements, this is leading to a set of evaluation on the service tax as well as GST. If I can come to you, Pankaj, what would you say is the impact of this ruling in the overall scheme of secondment arrangements, which is a common practice in cross-border transaction?
Yes, so if I see from the business perspective, definitely when India is a growing country and India needs the talent from outside, and the MNEs who are based having headquarters in outside India, they need some talent to set up, operate, run their business as per their practice, as per their data business setup. So they send some of their overseas employees to India. They work as per the Indian employment contract. They pay the withholding tax as per the section 192 of the income tax. They comply with the PF regulations, etc. And they are Indian entities said to be the economic employer of this part. So only due to the certain regulation or the social security regulations which other countries have, they may not move their financial or employment to India. And only due to this fact, the salary paid to the overseas associated party and over same amount is paid to the employee without any markup. Now the GST or the service tax on this amount puts the employee compensation as well as the cost of doing a business in India at a negative step, because there is nothing which a foreign company is getting a service. Again, previously we have discussed whether the receiving party is getting any benefit or no. The receiving party is not getting any benefit. So we were expecting that GST would not have been, or service tax would have not been applicable on this part. And we will definitely are working with the government and the association that if government can make changes to the legislation or provide clarification, because in the challenging time, the reverse charge, it's GST for the industry is also getting accumulated. So even paying GST and then making a kitty of unaccumulated GST is a challenge in the today environment. So we will really think and we are of the view that this should be relooked, seeing the business practice. And again, the principle which government has clarified whether this is whether any services have been received by the foreign entity in this payment, and under which act other compliances have been done. On that basis, our view is that this should be relooked. Otherwise, company will have to relook into their employment practice. They will have to shift their employment in India, which has another challenges, etc.
No, thanks for sharing this because this indeed has created a ripple across industry in terms of not just service tax as well as GST. But if I were to pay service tax as a function of the Supreme Court judgment, Sandeep, a quick question to you. Would I be able to take transitional credit of that considering the upcoming window on that? Or will the tax authorities say that this was not available to you on the appointed day of transition to GST regime and hence you incur a huge cost and hence you pay, but there is absolutely no recoverability associated with it?
Well, that's a very good question. See, first of all, only those companies would have service tax implications because of this judgment who were issued notices already. Because other than that, everybody else is almost outside limitation. Maybe first quarter of 17-18 could be a challenge for some people who have filed late returns. But other than that, everyone else is out. But if there was a demand for the service tax period which you would pay, and you would want to use the benefit of this window that will open because of Supreme Court judgment for transition credit, I would suggest one must really explore and take this credit. But your point is very right. Insofar as the law is concerned, the law said that the credit that was reflected in the return for the last quarter of the period before GST would be eligible as a transitional credit. So because this was not reported in the return, it was not there in the return, therefore it should not be. But at the end of the day, because this position has, we have to appreciate that there were tribunal judgments that were confirmed by Supreme Court. It was not that the matter had never reached Supreme Court,
Right.
which were SLPs were dismissed against those judgments, and this judgment has come into play. Obviously, I have my own views with respect to this judgment, and I believe that it should be reviewed. And it is possible, if this matter was argued little differently, to have a different conclusion. Be that as it may, it is a very good thought. And if at all, if there is a company which has an implication under the service tax laws, they must explore the option of taking this credit and litigating and taking it to Supreme Court again.
Yeah, thanks. Karthik, if I can just come to you, would you say that this judgment would equally extend to GST as well? I believe it would because the principles continue to be so. If yes, what happens to the past 5 years, which has already gone? And I'll come to you, Sandeep, on the same issue as well. So Karthik, your quick thoughts on this, please.
Judgment applies to GST. I completely agree with you. There is no change in the law or anything. So judgment completely applies to you.
And
coming
yeah,
to
please.
5 years, yes, you remain, as far as GST is concerned, the liability remains open for all the 5 years, right from 2017-18. So it depends on how you are able to, if you are faced with litigation, what you are going to do. Will you say that, okay, I will pay off the tax, claim a position that I am, because I have paid the tax now without before any notice, this is a tax on which I can still claim the credit, because this is not going to be a tax credit under an invoice of a supplier, but a credit under a self invoice, and the time limit given should not apply. And I take that position and take a interest risk, or B, I continue to dispute the Supreme Court judgment, try to distinguish it factually and on some legal grounds, like a couple of legal grounds, which I think Sandeep might also was going towards that. One, the aspect of dual employment and or the joint employment, that was never discussed in the entire judgment. And if you remember, in service tax era, there was actually a draft circular which was issued saying that if there is a dual employment, joint employment, there cannot, the employment agreement is with all the joint employers. So had
Which
this
has
position
got
been tested here, then it would have been very interesting to see. And obviously the factual aspects of this case itself, something like the employees were seconded really to execute the work entrusted to Indian entity by the group, the Indian entity not having the power to terminate them. Now, if those factual aspects can be addressed and covered, I think it would be interesting to see whether can somebody force the court to take a relook basis either those factual aspects or a couple of legal arguments.
So I'll extend
Because
this to
the
Sandeep
employee,
then Karthik. Sorry, one second.
Yeah,
I'll extend this to Sandeep for
Sandeep.
two reasons. One, because I think we should devote significant time to the last point topic that we have at hand, and we're running short on time. But Sandeep,
Yes.
quickly, would you echo what Karthik just said in terms of immunity for the past period, especially in the GST? It's a service tax judgment, contains the same principles for GST. Possibility of immunity, or if not, then one would have to step up the analysis that we for each of their arrangements, intergroup company or otherwise, cross-border arrangement, figure out the exposure as well as the way forward. Quick thoughts, please.
So very quickly, number one, obviously legal principles remain the same. If the conclusion of the Supreme Court is that a contract like this is a contract for service and not a contract of service, and in that scenario, obviously the liability would arise in GST also. But as Karthik said, the judgment is a judgment on peculiar facts of the case. While the CBIC chairman in his recent interview himself said that it has implication in the GST also. But each of the secondment agreements needs to be analyzed, and the employment agreement within the entity needs to be analyzed. There is an exposure definitely, but the Supreme Court judgment did not analyze the various aspects of what would happen when there is an employment agreement in India. Schedule 3 in GST laws specifically exclude services provided by employees to employer. Whether only the reimbursable part would have GST implication, or the salaries paid in India directly would also have these implications. All these needs greater detailed analysis. But as I said, there is a lot more on this issue that would have to be dealt by Supreme Court at some level to settle this law. As on date, the position that is emerging is not the full and final position, though it will expose every company which has a foreign expat working in India. Our experience also suggests that obviously the authorities have now started visiting everyone and asking for them to deposit the tax.
Thank you. The last topic for today's discussion, where I think we should devote enough time, is the recent big move of the government with respect to GST treatment on residential dwelling. Now, if rental of residential dwelling is made available to a registered person, there's a GST incidence at 18% on reverse charge basis. Now, this amendment has brought to fore a minefield of questions. For example, what exactly constitutes residential dwelling? Is a degree of stay parameter at all for evaluating whether it is residential dwelling or not? Do I need to register in every state for this? If I pay tax, do I get credit? So on and so forth. So Karthik, what do you think? Do you think businesses would need to be registered in each of the states where the residential dwelling is located?
There are multiple views which are being considered here. I would just touch upon one of them, considering what we have time here right now. But when you say, what does the notification say? That if I am renting a residential property, if a person rents a residential property to a registered person, then the registered person needs to pay tax under reverse charge basis. This should lead you to the first examination, that who is the service recipient here. And as per the established principles and the definitions which we have, the recipient in this case is the contracting entity. I would slightly put it in a micro way that in a lease agreement, who becomes the lessee? If a corporate enters into a lease agreement by saying that from a location where it is already registered, the recipient definitely becomes that person where it is registered, and the test of attracting reverse charge gets fulfilled. So now what happens if the lease agreement is entered into by a person where it is registered, but the property is registered in a place where there is no presence of the company, which typically happens in many industrial cities. To my mind, because the recipient is a registered person, the reverse charge should apply. And there is a logic of saying this in the other round also, that the similar arrangement has also been made in IGST Act. Had it been only amendment in CGST Act and not in IGST Act, the IGST reverse charge notification had not been amended, then probably what I am saying may not have been possible. But even IGST Act says you can go to reverse charge. So to my mind, irrespective of where the property is situated, I think you should go with where the lessee address is. If the lessee address is a registered location, there is a reverse charge liability. If the lessee address is also of the place where you are not registered, you may not be need to register, and the lessor needs to go under forward charge. But again, there are multiple other views
No, so
and
that's an interesting
angles to
take.
that.
Yeah, that's an interesting take, because the other way of looking at it is, if it is an immovable property in a particular state, and if for me to decide whether it's an interstate, intrastate supply, so on and so forth, I will look at the location of supplier, that is of the landlord. If the landlord is and the immovable property are in the same state, then it becomes more of a CGST and SGST transaction. Else, I will end up in a situation where, let's say, the property is in Faridabad, lease agreement is entered with me in Delhi, and I'm registered there, and I'm ending up paying IGST on a transaction which is typically subject to a intrastate treatment. Sandeep, do you think there's any room to argue, given the scenarios that we're discussing right now, any room to argue that if I'm not registered in the state where the immovable property is located, then I am not a registered person and the levy would not arise? Your thoughts, please.
Okay, so 2-3 thoughts I have, and I have a very legalistic view of this, and maybe practically people may not want to agree with me. Obviously, we want to fight everything in the court. My view is that insofar as the notification is concerned, it uses a specific phrase which is called registered person. It is a defined phrase. It says registered person means person who is registered under Section 25 of the Act. There is another phrase under the Act which is called as taxable person, which means person who is registered or liable to be registered. The government has not used the word taxable person, but a registered person. So unless you are specifically registered in the state where the tax liability is to be seen, this tax liability does not arise itself. So there is a jurisdictional fact that must exist before the liability can come. And if the jurisdictional fact of you being registered in the state is missing, the liability will not arise at all. But obviously, it is something which is disputable, because insofar as our turnovers are concerned for taking the registration in other states, we have to look at a wholesome manner of the turnover on all India basis. But be that as it may, I still believe that there is a fair bit of merit in the argument to say that the jurisdictional fact of registered person is missing if a company comes and takes a premises in that state. On the other aspect of whether this transaction can be treated as IGST and interstate transaction and IGST can be paid on the same or not. So I am looking at it from a constitutional perspective. Article 269A says that the power to decide whether a transaction is an interstate transaction or not is with the center. On the local supplies, state gets the tax. On interstate supplies, center gets the tax, and then it divides it. In terms of that laws, Section 8 provides that interstate supply is only such supplies where the location of supplier and the place of supply is in the different states. In this case, there is no doubt that both the landlord and the place of supply are in the same state. Therefore, constitutionally, this tax belongs to the state where the property is located. Now, taking any position other than that would mean that we are dismantling the consumption-based principle on basis of which GST is based. So merely on that constitutional aspect, I would not want to agree with the position that IGST can be paid. But I know on the same hand, government has also amended IGST notification. Why? There was no need for it. And to that extent, Karthik has a logic that why would they have amended this notification if it could not have been under IGST, reverse charge under IGST? Be that as it may, maybe it is an oversight. Maybe the government is in the habit of bringing in every amendment that they bring in CGS to IGST. But at least my view from a constitutional consumption tax principle perspective is that this should be a local supply. And if you are not registered in that state, the levy should not fall. However, if the quantum is less or you don't want to go through this litigation, because I don't think this would be a major quantum issue for anyone, companies may still look forward to complying with it on a conservative basis.
Thanks. But considering there's so much uncertainty on such crucial aspect, right? Pankaj, do you think there is any negative impact from an ease of business standpoint?
Yes, yes. So, Smita, again, this is again issue related to the secondment, because in most of the cases, the company provides the housing arrangement to the foreign employee coming to in India, because of the reason that landlord prefer to have a direct contact with the Indian company rather with doing it with the foreign employee. And for the domestic employees, there is an opportunity whether it can be converted into HRA and then they take their lease themselves. But if the employee is a foreign employee, they do not have any room to take the house on their name. So companies have to provide the accommodation. So we see it as a very negative amendment or negative thing. And secondly, again, this is a personal consumption, credit available or no. These are the another issue. And but Sandeep has said if there is a multiple stances where the place of business is one state and place of residence is in other state, Delhi, NCR is there, Hyderabad, Telangana is there, Mumbai, Gujarat is there. So these are the multiple instances where the litigation will arise. So one thing is that from the ease of doing the business perspective, either government should remove the GST on this part, because this is not a benefit. Again, this is a contract. This is a contractual arrangement between the employer and employee, that under the employment contract I am providing, though the rent is being paid to the third party, but anyway it has a connection with the employment. So on that basis, it should not have been there, but it should be there. Then government should also try to see the allied laws, etc., for the provident fund on the international worker where HRA is covered for the PF, etc. So it is a double whammy. Either if we stay on this side, the GST to be paid. If we go on the other side, then we need to pay the PF on the similar amount. So it is a kind of a negative amendment or negative circular, I will say, from the government side, which will definitely impact the business and the cash flows.
Especially as you were mentioning, one doesn't have clarity on do I pay, when do I pay, where do I pay for my expats, do I pay for, let's say, my senior level executives whom I contractually am supposed to provide with an residential accommodation for project specific. If it is all a function of business, then why is it that I need to even get into this levy at all? And as you briefly touched upon the fact that if it is as part of my employment contract, which harks back to your perquisites circular, then it should be available. There should not be any concern around that. While we have overshot our time, but I will quickly discuss the last bit on this. Karthik, if I end up paying tax, is it recoverable or not? Or does it become a cost in the system?
We do have an advance ruling on that in case of POSCO, where it was held that this credit should not be available because it's a personal use. And definitely giving a residence to somebody easily looks like a personal use, but there are a whole host of different issues which one needs to consider. One, I am giving this benefit as a part of my employment contract. This is nothing but in the course of business. Nothing can be farther than this uh, to say that this is not in the course of business, because as Pankaj said, I would have practical challenges bringing those expats in, because no landlord would want to do a rent agreement with an expat. They would want an Indian counterparty for obvious reasons. So definitely it is in the course of business and one must get one should get a credit. Second part, obviously, uh, there are some international jurisprudence which says that if something which you have incurred as a business expediency, you should get a credit. And the third point, which I think needs to be examined a bit more in detail, is when you look at the terms and or the frame of IGST, CGST Act on the credit restrictions, Section 17(5)(b), which restricts credits largely on the all the personal consumption items by the employees, which it lists down practically everything is personal consumption by employees and also by somebody else. But everything which can be consumed by employees is easily covered there. Now, will you say that the credit restriction has to be read as 17.5b because there is something which is not covered specifically as this renting? You cannot go to 17.5g as a general provision which restricts credit on entire personal consumption and restrict the credit in 17.5g because it is not restricted in B.
No,
And the specific over general dispute
No,
needs
no.
to
So
be
Karthik, here I
evaluated.
would let me just ask Sandeep to also chime in a bit, because as you were mentioning, 17.5b lists down the specific scenarios where credit is restricted, leasing being
Yes.
one of those, and as a circular clarified recently, that is limited to motor vehicles. How do I harmoniously then read the restriction under personal consumption versus the specific scenario, credit restricted scenarios? Sandeep, your take.
So my view on this is that insofar as 17.5b is concerned, it is not related to renting at all. It does not cover a situation where renting of immovable property. It was always clear, but I think there was some confusion because of which representation was filed. On 6th of August, they have clarified that the word leasing, renting, etc. in the circular are not related to anything except renting of vehicles and renting of aircrafts and vessels. Insofar as 17.5g is concerned, the word personal consumption has to be personal consumption of SSC. So personal consumption of a company or personal consumption of a proprietor, a consumption which is done by my employees in course of furtherance of their employment, or a house given to them in terms of my contractual obligation under my employment agreement, is not a personal consumption whatsoever. But the point is that if that is the interpretation, why did the government bring in this change? If it is not going to bring in any extra revenue, it is not going to increase the tax base, then what would be the purpose? So I would assume that the government has bought it with an intention that it is non-creditable and therefore would increase the revenue. Otherwise, this whole exercise is futile, at least mostly. So there would definitely be dispute on ITC, but my view is that this is in course and furtherance of business, at least insofar as your employees and directors to whom you are providing the residential premises under a contractual obligation, that should be creditable.
Thanks, sir. So going by the way, then the clarifications are being issued, because the idea behind issuing these clarification were to settle the long-standing interpretative issues, as was also mentioned as part of the GST Council recommendation. So, Pankaj, do you think that the way circular are being issued, and also there is another one expected on the long debated issue of cross-charge, do you think these circulars are actually helping us move towards a resolution of issues, or are we unintentionally opening ourselves to another set of fresh disputes altogether?
I will not say this. If you talk about only the circular on the residential property, then definitely it is opening a lot of Pandora box. It is not only concerning the tax professional, but is also now concerning the HR heads of the company, that how we structure our salaries, how we provide a better life work experience, etc. So it is a double whammy for the companies now. So definitely this circular is a whammy, double whammy for the companies. But I will not say in a journal the circulars are confusion. Certain circulars provides clarification, but certain circulars opens a lot of Pandora box of questions, etc., which we have recently seen that one circular is issued, then the clarification on the circulars are being issued. So
therefore, then considering the specific issues that we've discussed today, then this is an immediate flag or a request to the policymakers. So to issue another circular which addresses these points so that there is no diverse interpretation, because amongst ourselves we have shared so many alternate views, else it will lead to a new chain of litigation. More so also, if I think about it, the 5-year GST milestone that has been achieved recently, and if we look at the statements that are being made by policy makers across public forums also, that the approach nowadays is going to be more of a consultative approach, so that we are on a path to a more mature GST system with the overall objective of providing certainty in taxation and ease of business. So I just hope that these aspects, the one especially that you highlighted, Pankaj, on the business concerns, will be addressed by the policymakers soon. I understand we've overshot our time by a mile, but let me just see if we can take at least 1 or 2 questions. Just 1 second. There's a question says that after paying tax under RCM, a company won't be able to claim ITC as it shall be ineligible if it is employee-related expenditure. Ultimately, additional cost to the company. Karthik, if you can address this because we've discussed this, but if you can just quickly clarify.
Yeah, I mean, this is going to be a very dispute now because whether it's a personal expenditure and you can claim the credit or not, the jury is going to be out. But there are decent arguments to say that ideally there should be a credit available, but it is going to be a very, very litigious issue. As Sandeep also mentioned, that if you are not going to give a credit, why to bring? If you are going to give a credit, why to bring this amendment? If it is just to increase the tax base, I mean, the jury is going to be out.
Pankaj, question to you while you've touched upon this earlier. If do I need to pay tax on perquisites given to on any amount recovered from employee even now?
I think answer to this question is no now.
Yeah, and especially if it's a function of your contractual arrangement, then definitely a no. Sandeep, a question to you. If I've sent my employee on a secondment to my client and the client decides to engage the employee while the contract clearly had a non-compete clause, would this be a situation of tolerating an act, or is it a breach of the contract with my customer?
You see, the underlying contract, it is like one of those arrangements where there is a minimum guarantee or a minimum locking period for lease. This is actually a form of consideration that you are receiving where there is a service agreement which is agreed and there is a minimum guarantee or a condition that has been agreed under a contract. So therefore, as I said, unless it is a damage for breach under 74 or 72, it would not qualify as a consideration under a service contract.
Thank you. One last question. Being a tenant, should I pay GST under RCM since I run a business and I'm registered under GST? Pankaj, if you want to take this up. I'm registered under GST. Do I pay under RCM? I think you'll see that, all of the above that we've discussed.
Yes.
If you want, right? Yeah, all of the above. And that same point goes on tax type.
Yeah. Just one point to add, Smita. If you've taken the house for your personal consumption, not doing any business from there, then there was a tweet clarification which said that here there is no RCM.
Exactly. Where just
so if a proprietor goes ahead and takes a residential or on a rental.
Right. I think we've genuinely overshot it by a mile, but thank you all so much. This was absolutely fascinating having your thoughts and diverse perspective. And we look forward to continuing this series and discussing as many issues as come about. Hopefully there will be circulars which will not lead to a next set of litigation, and we will move towards a more robust system. But thank you so much for joining us today, and thanks for your time.
Thank you.
Thank you.
Have a good weekend. Thank you.